Welcome, ladies and gentlemen, to the Committee on Public Finance. And today I am a pro tem chairman in place of the regular chairman, Dr. Harsha De Silva, who is out of the country. We have 4 of us present here and 2 others joining via Zoom. For the benefit of the record, may we ask the Governor and Deputy Secretary of the Treasury and the others to introduce themselves. Yes, we'll start from the right extreme corner. Now, according to the projections, the oil inventories are falling very rapidly, and if it goes beyond September, it would come to a very unsustainable level globally. So I think now Indians are already, getting ready to work from home, and various other issues are being implemented now. Yeah. But we are still the Finance Ministry has to look at this because, policy decisions have been taken much ahead of time. Of course, let us see whether Trump and President Tsai could come to some settlement and bring some pressure. But as it stands, the projections are quite...
Yeah, you are very right, Honorable Chairman, because situation in future is very uncertain. So I think, for example, the last week, Prime Minister Modi, as you mentioned, made an announcement to conserve fuel consumption in India, despite $700 billion they have reserves. But still, they are concerned about the elevated oil prices of the economy. That's for large part of this part of the world, that is a concern. So that's where, if this is remaining longer period, there will be a more adverse outcomes in terms of exchange rate, in terms of current account, in terms of inflation. So that's why this period of uncertainty, very difficult to make a projection with a firm view beyond 3 months period now, because things are changing quite rapidly.
No. Why, Governor, you have a wide margin between 3 to 7% on inflation targeting, right? That's very convenient. But the experts are saying it must be further narrowed down. You see, but of course, the argument is taken that for developing country like ours, it's better to have it that way. Okay, go ahead.
Yeah, I think inflation target what we have now is based on the agreement we signed with the Minister of Finance in 2023 for 3-year period. That is 5% on the basis of 3-year period, ending in, I think, August this year. So then going forward, in consultation with Minister of Finance, we can revise it upward or downward depending on the circumstances. That work is going on, and that is the agreement with the Minister of Finance. And so in our view, right now, the 5% target is based on our research that we determined last time. Still valid, at least 5% should be the medium to long term inflation target for countries like us at this point.
You mentioned the circumstances. This is just to understand better. What could be those circumstances?
For example, if we are to reduce the inflation target to 2%, now current inflation is 5%. If we are reduced to 2% next year onwards, we have to very strictly tighten the monetary policy, raise interest rates unnecessarily to bring down current inflation 5% to 2%. I think that is not growth supporting in our view. So for countries like us to balance the growth and inflation, it has to be a balance between both. And we can achieve low inflation at compromising the growth. If we achieve a little bit high inflation, that will little bit support the growth. Okay. So that's why we have a consultation with the Minister of Finance and Government to identify what is the desirable rate of growth for the country from the government point of view. So if government says we need 5% growth, and the government same time says we need 2% inflation, that is not consistent at the current point. We can bring 2% down to 2%, but then we have to raise interest rates slightly, that will have impact on the growth. So these are the factors we are doing, and also there are a lot of other factors like what is the kind of a level of development. So we are still $5,000 per capita income country. When you compare to the similar countries in the similar region of per capita income and size of the economy, is usually around 4-5-6% inflation targets. For example, India is the huge economy, still inflation much lower than us. Target is 4%. They also at the beginning they had the higher target. Now gradually over a period of time they are bringing down with the system stabilization, growth is coming back. That's how the process takes place.
Added to this is the IMF pressure on cost-effective pricing with this energy crisis, and I think they are holding back even the next tranche of 700 million. So, what is your estimation of the board releasing those funds?
Oh no, that's board. I think most probably board meeting will take place by the end of this month to complete the 4th and 5th review. I think that will happen most probably. I think we are very confident, but we have no right to firmly say that because that is IMF responsibility. But we know that most likely that will happen by I think 3rd week of this month. So that will release 4th and 5th review combined within this month. I think coastal fuel pricing is now already come out as adjusted petroleum and electricity. That reflects the coastal inflation for the time being.
Could you explain the rupee depreciation in the recent past, please?
Depreciation is mainly coming from the external factors. For example, now compared to the petroleum bill, I think this first 5 months so far, 4 months petroleum bill itself has been $1 billion compared to last year whole year is 1.5 billion. CPC only import bill. So there's a large demand for foreign exchange to purchase petroleum. This is only by CPC. There are other two players also buying. Larger petroleum bill has been significantly increased. That is one source of high demand for imports and high demand for exchange. At the same time, there is a slowdown in tourism, as also affected to a certain extent. But these remittances are doing okay so far. In terms of exports, although imports will have gone up significantly, the exports have not performed to the same extent. For example, reason is that we are not petroleum or commodity export country. We are exporting garments, tea, rubber, all these commodities. Those prices have not been increased as much as the commodity prices. As a result, our import bill, export earnings are relatively stable at the around 1 billion, 1.2 billion level monthly, whereas import bill has gone up to close to 2 billion on monthly basis in the last couple of months. That has exerted a pressure and created a deficit in the foreign exchange market, and that is leading to depreciation of the currency so far.
So you predict that will continue in the next quarter?
No, if situation continuously same trend, unless we get some additional inflows, so that there will be gap in the foreign exchange availability, so that will reflect in the currency. That is inflation targeting framework and flexible exchange rate mean exchange rate is difficult for central bank to fix exchange rate at some point. We can only smoothen out the short-term volatility.
So one more.
Yeah. Governor, in order this would exchange rate, reference exchange rate help reduce exchange rate volatility?
Sorry?
There is this reference exchange
rate.
Yeah.
Why don't you explain that?
Yeah.
So essentially, Honorable Chair, from I suppose by the end of this year, we are planning to introduce a reference exchange rate to the forex market. So essentially, that would mean that there will be sort of a real-time indicator for those who are operating in the market to rely on. So right now, I think most of the market players, the exporters and importers, they would look at yesterday's exchange rate to see whether they would want to sell their export proceeds or purchase for imports. But going forward, there would be sort of a more real-time reference exchange rate available for the financial institutions as well as the market players. At the same time, this would also facilitate introducing derivative products so that any exchange rate risks could be hedged against.
We have a shallow forex market with the limited liquidity and dominated by few players. That's the reason. Governor, it seems that the banks are retaining substantial foreign assets as of February 26, $5.7 billion. Right? Now, how does the bank monitor their expanded foreign exposures?
The foreign exposure is not expanded exposure. What happens basically when the banks build up foreign currency deposits also, that foreign currency liability. For example, 6.7 billion of foreign assets held by is matched with their own foreign currency liability in terms of deposits in foreign currency held by the banking system. So that they can't overexpose to one currency against the other. That's a huge risk. That's why when remitters are doing well, people are sending money and partly they keep in foreign currency deposits. Then banks will have to have a correspondent asset to match the liability. That's how it is increasing. So if they 6.7 billion, whatever you mentioned, if they converted 3 billion into rupees and kept only 3 billion in assets, if 1% depreciation had a huge impact on the balance sheet of the bank. So we don't allow banks to overexpose or mismatch in currency. That's under direction. That is a prudential way of managing it. So only way that banks can diversify that is that, as I mentioned earlier, if they had the opportunity to invest in foreign currency assets in terms of lending to exports here or lending to government in foreign currency, then they can bring that money here and lend to local domestic sectors if there's an opportunity available. What happened last several years, the demand has in foreign currency borrowings, both government and private sector, has been lower than the build-up of foreign currency liabilities in terms of deposits in the banking system because remittances have been doing well.
May I come to another subject now? We see the private sector credit expansion. Now, in the private sector credit by licensed commercial banks is expanded by 2.1 trillion in 2025. The growth has been by 25.2%. Finance companies expanded credit by almost 49%, right? So this is a big recipe for disaster if it is not managed properly. So what we are asking is what is happening to the banking and finance company consolidation issue. Is there a roadmap and what is the plan? Because there was talk about this.
Let me, on the financial companies consolidation, we have director and bank supervision.
Yeah.
She is leading the process. I think why don't you brief the progress, please? Then I'll come back to banking sector.
Regarding the non-bank sector consolidation master plan, we have issued a new direction, new guideline in 24 December, and we are following it up we have given a yardstick of all the ratios and the numbers. So whoever who is able to maintain 60 marks out of 100 marks can remain as a standalone company. And we have only 3 companies that are slightly below this, and we are following it up and requiring the boards to find a merger partner. And the timeline is 31st March 2028. So from 25 March, so we have given a timeline and to work towards the master plan.
So this is the master plan currently based on the earlier master plan. We have brought down, I think, over 55 finance companies now below 30. Consolidation has been happening over a period of time. Now we have much
between
more
finance companies.
between finance companies, yes.
Yeah, no, I'm saying bank and finance companies.
From the banks, last DB director bank supervision to why don't you brief this?
Yes, banking sector also we have issued the consolidation framework, and based on the asset size of the bank, there are certain requirements, and if asset base is below 400 billion, there is a progress to be followed, and on a half-yearly basis we are monitoring on qualitative and quantitative data as well as some of the requirements to be met by the respective bank, as well as internally we have an internal assessment based on their half-yearly reporting, and first reporting started from this year February.
If I may add, Chairman, the other fact is that the banking sector, there are 3 segments. One is state-owned banks, big and small. Then private sector, there are large, big banks and small banks, then foreign banks. So what we are trying to encourage and consolidate, especially the small banks in the private sector as well as the state government-owned state banks. In the current environment, it's very difficult for small commercial bank to survive depending on the requirement of, for example, technology, core banking systems. They don't have sufficient business to survive and have investment to sustain this business. That's why we have, in consulting with Ministry of Finance, first on the state-owned bank side, there are 3 large banks and 2 or 3 small banks. There's a process of encouraging consolidation of some of the weak state-owned banks. The other side, this system will encourage the private-owned large banks versus small banks. That's another consolidation process. I think the way the directions have been issued is to encourage small banks to merge with the larger banks and have a stronger banking sector. This is a process. We can't forcefully merge. I don't think that's otherwise government will have to intervene and support in terms of tax reliefs and some contribution. We don't want to make that a cost to the taxpayer and encourage banks themselves to consolidate on the basis of their performance, their ratios, and then going forward their sustainability.
Yeah, Kavan.
Sir?
And small borrowers.
Sir?
Won't it adversely affect the small
No, this is why
or the SMEs?
no, the small bank, there are certain small banks, they will remain and serve to small, for example, larger part of the small SMEs are financed or served by finance companies. That's where this other one is a micro credit institution that there's a new registration. And then on the banking sector, there are small banks like Regional Development Bank, the Sun, all these small banks are serving to different clientele in micro businesses. We are not encouraging those banks, those to merge with the larger banks. But banks, those are having issues in terms of governance, capital, liquidity, those can have impact on the overall system stability. That's why we encourage them to merge with the large system.
Governor, Dr. Kaushalya asked this question about the SMEs because we have, what we have to look at is now we have recently enacted this bankruptcy and insolvency law, right? That's a big boon, but only thing is, the attitude by the big banks, they think the big players don't fail, right? They only go after the small players, and with the parate, execution available, you see, it's a lot of these small timers are failing in a big number, and a lot of these things we have listened to. There are chambers here. Now we want to know about the other issue of non-performing loans on the state banks. Now we talked for a long time about a special purpose vehicle. Creating this bad bank concept. Now, where is it standing now? Because
that's the fear.
I think the government.
Yes,
that's a good point.
Yeah, that's. I think government will have to decide to establish a bad bank or development bank. That is, someone will have to infuse capital. So we are the regulator of the banking system. Establishing a new bank for different purpose. There is state-owned or private. It's a different. This is government policy. As I can see, government has been talking about establishing a development bank or establishing a bad bank to absorb some of the bad assets and do the liquidation. Other area is that insolvency law that was passed recently. So one of the instruments to help SMEs to protect the enterprise and bail out the entrepreneur. So enterprise can continue through insolvency process. The entrepreneur can be bailed out through that resolution process. Those are the new instruments. So those will have,
there is a banking ombudsman. There's none of these things work. Only thing is there is also difficulty in the judicial system. We will have to work with the Justice Ministry and get our court system also to be more attuned to faster disposal of these commercial cases. In fact, larger number of commercial courts and various other things. There is a lot of problems in the judicial sector as well. But now coming back to the Finance Ministry, now these important acts which we passed, one is this microfinance bill, in this insolvency and bankruptcy bill and gambling authority bill, none of which can become fully functional without the regulations being enacted, right? So you will have to focus on that and get those things done, because otherwise these bills will just lie there. And you can see, if you tune into one of the cricket matches, they are having a field day, these online gambling fellows, right? Your revenue will not come, right? So this is going to be unless you quickly buckle up and do this, they are having a field day, I can tell you that.
On that type.
Now we see a lot of arrest of the foreign people.
Honorable Chairman,
Yes.
I think I also will have to add to what the Governor said, that it is a very productive discussion. It has to be like this, of course. Now, but anyway, going from the last question, asking it is like independence, I'm not going to go in. It's a debate we can have like 4 or 5 hours here, but I'm not going to go it. I did some research, and then how central bank independence work for monetary stability and growth. I have done some research, and then whenever needed, I can do that. But then I have another 3 points. One is this flexible exchange rate and depreciation. Of course, Governor already addressed Honorable Ravi Karunan's question about the debt stock. I'm not going to go into that. But what I'm going to say is that depreciation of a currency is not as bad as we think. Because I will give you one example, basically, Honorable Chairman. I'm sure you can remember the trade war between US and China. US has been always saying that Chinese yuan is depreciated. And then they are taking advantage of depreciated currency. Why? When you have a depreciated currency, means imports get expensive, exports get cheaper. So that means our exporters can do more. I think that way it is a country where we are looking at export-led development. I think that is one area we can think about, and therefore the depreciation is not, it is sometimes exporters, it is good. In fact, it depends on the import content. Some industry like textile, clothing, is a high import content. So therefore, they may not benefit. But other, like maybe import substituting industries and other industries, they will benefit from that. And export-oriented industry, they will benefit. That is one thing. And here also, Central Bank, as I understand, I was with Central Bank last 2.5 years. Central Bank, this exchange rate is determined by supply and demand. It's not determined by some hidden hand. Like I know, Honorable member, that it is like we had a fixed exchange rate. We know the problem with that, so we went to flexible. Unless there is a huge, maybe, I think Governor explained it, deviation. So maybe, of course, with certain, there are, as Governor mentioned, that when you want to intervene, that's going to be, there is a cost also in terms of basically all, the inflation and other things. So that is going to be a problem. So therefore, that is left to the market. Unless it is really needed, Central Bank will not involve it. That's one point. Secondly, of course, the other major issue is that, of course, economic growth and Central Bank. Because it is raised all COP meetings in the past, I have been here a number of. So again, I did some research. I don't think we can do it here now. And then based on internal and external evidence, I can say that Central Bank's functions, Sri Lanka, contributing to economic growth. Now, Governor mentioned about monetary stability. Is there any country in the world that has, especially developing country, that has achieved economic growth without monetary stability. I don't know. If somebody can tell me, I will learn from whoever is saying that. Every country that achieve economic growth, monetary stability, financial stability is a prerequisite. That is exactly Central Bank did. Now, one can ask counterfactual questions that basically if you don't have low and stable inflation, if you don't have low interest rate, if you don't manage properly exchange rate, if it is a fixed or high deviation, or if you don't have these international reserves last whatever the years, could we be able to achieve the economic growth that we have here now? Like say 2024, 2025, we have 5% growth. Now, basically, if you ask that question, you will see that without financial and monetary stability, we may not be able to achieve economic growth. So that is the role. I think we can debate that later. I got a lot of information from other countries, and then we can discuss that. The final point is on NDB issue. In fact, last time when you had the discussion here on NDB, I listened to carefully. One thing we need to do is to understand the role of CBSL, bank supervision. I think, bank supervision has a role. It is not what I understand as a board member, that Central Bank is not supposed to or can, I think Governor mentioned it, basically monitor all millions of transactions. Transaction monitoring and other things left to board, audit committees and all other internal organs or the branches of that NDB. It's not Central Bank. So, Honorable Chairman, these are just not to open the debate, but just some comments that I want to mention, basically what I gathered from the discussion. Thank you so much.
How is the situation? We are having it in June, right? They are coming down to have an investigation in June.
Which one?
This grey market area where they put is mutual.
Mutual relation.
Yeah.
That I think we are making progress. I think there's a challenge again here with recent incidents of the this reserves payment issue as well as NDB issue that has exposed some of the weaknesses in our systems. So in the mutual evaluation process, we have been doing well and working towards trying to maintain or not to downgrade mutual evaluation of Sri Lanka happening this year.
So that's a grey market area, no? Where you treat whether it is pure or not. Or
yeah, I think we were downgraded to like a grey listed back in 2017, I think. No? 16 we were grey listed, and then we did a lot of things and came out of the grey list, and now we are the normal list. Last two all mutual evaluation, at every mutual evaluation we have been grey listed because we didn't have sufficient systems in place to address AML safety concerns in the country. This time we want to ensure we won't be grey listed in this time. Evaluation is going on. We have been working with all the other relevant agencies, say the Gambling Authority, Gem and Jewelry Authority, banks, non-banks, lawyers, accountants, all the relevant agencies, Inland Revenue, Customs. So we have a program going on. So what we are hoping is to ensure we are getting teams ready to answer in the assessment process and show that we have been strengthening our systems, and we will at least maintain the current rating, not grey listed.
So what's the grading at the moment? What's the grading at the moment?
We are above the grey. We are normal.
We are normal.
We are normal now.
So maximum they can do it, put us to the next bench.
Put us to the grey listed, because every time evaluation process is different.
So that is regarded as grey market.
No, not grey market. This is a grey listed means
grey listing. Okay.
Grey listing.
Governor.
This is other one is a black listing is the lowest one. Grey listing is in between. The normal one is above. So we are now at the normal.
Were we in blacklisting ever?
No, we never. We were grey listed all the times when we had mutual evaluation in the past.
So best is the present, full
present,
normal.
Then governor, deputy governors, members of the monetary board, DST, other officials who have attended the discussion today. Thank you very much. So we will approve this annual economic review and present it to Parliament next week. Thank you very much.
மேலதிக செய்திகளுக்காக எமது யூடியூப் தளத்தை சப்ஸ்கிரைப் செய்யுங்கள்.